in the direction of this major trend. So basically, it does indicate there's activity taking place, and your choice as a trader is to either trade it as a counter trend trader or as a trend trader. Okay, now identifying it, for example, as a counter trend trader in this case, looking for a rally, you may want to go back at the chart patterns and look for something that's breaking out to the upside, or perhaps making a swing bottom in the emerging pattern section of AutoChartist, and giving you a clue as to how high or how far this market could rally inside that chart pattern. Okay, and at the same time, if we get a retracement on this chart into one of these retracement zones, then you may want to flip to your AutoChartist chart patterns, and you want to see if anything's running into resistance, so you kind of have this commingling of the two types of disciplines, your chart pattern telling you there's a top, and also your Fibonacci pattern looking for a reversal point or a resistance level. So the combination of these two can add up towards a perhaps a a good and profitable trade. Okay, we'll move on to another chart pattern, and again you can see the lightning bolt inside here. This is called the 3-point retracement Fibonacci pattern, and this pattern is highlighted, or it's designed to help find a high touch point, which leads to then a low support area. So in this case, you're looking at some mathematical symmetry going on in the marketplace, where you have a leg from B to C, and then you have a rally from C to D. Well, this area here in D is usually a percentage retracement of B and C. So AutoChartist looks for characteristics of either a 50% or 618 retracement of leg BC to identify point D. Once this is done, and it's done automatically for you, then you're given this set of parameters and where this market could break to. You can see in this case, it was almost a textbook example for the Euro Japanese yen at that particular time. And again, you'll see the characteristic lightning bolt that I mentioned in ABCD. So the premise is basically the same. You have a market that's in a downtrend, and once you see this retracement level back up to point D, you can make the decision that you want to go short the market on a swing, looking for action into either any one of these retracement levels or even further. And again, this pattern can be combined with any of the classic chart patterns to show you the same type of action inside of maybe a triangle or a wedge, or maybe even inside of a channel. This market here may have the characteristics of a channel taking place. You can almost see a channel-like formation, and by using these Fibonacci levels inside that AutoChartist channel, you may be able to take advantage of movement in the marketplace, and you may be able to set a better price target, or at least have a better way to, or better reasoning behind an initial stop or a trailing stop. Okay, another pattern which follows the same premise as we talked about before about the lightning bolt formation is this 3-point extension Fibonacci pattern. Okay, this is a little bit different than the expansion. If you go back to this retracement pattern, you can see that there was a definite BCD movement and then a lower low. And if you go to this pattern, you're looking for an extension and a rally back up. So what's happened here is you've had this short move from A to B, and then you had this elongated move in terms of price and time, point B to C. That's really the difference between the extension pattern and the retracement pattern. It's that long leg here. And what it's saying is basically the same as we mentioned. The core theme of this is that you're at a point where this market could go on a rapid retracement back up. And again, as a trader, your choice is to trade counter trend and wait and take advantage of a rally into these retracement levels, or wait for the market to reach one of these retracement levels and start another leg down. Those are your choices. And again, to repeat the same premise, if you see this pattern occurring inside of a conventional chart pattern, then you'll at least have extra parameters to watch and certain levels that can give you a little bit more confidence that a particular bearish chart pattern that's taking place is going to continue to work lower. When working with these chart patterns and Fibonacci patterns, no one is certain the direction of the marketplace, but what you're trying to do is build confidence that you know the tendencies of the market or how it's going to react. For example, if you see this pattern taking place, or you have any kind of studies going on about the background or the conditions of the market today, for example, if you had an oversold level on one of your indicators, maybe an oversold RSI or stochastic, then you may want to start looking to see if you have any of these extensions taking place in your list of trades with on AutoChartist, because this type of pattern typically occurs after the market's had a prolonged move down in terms of price and time and has reached oversold levels. So this is important that you can combine the two. So if you're looking at conventional oscillators for overbought, oversold conditions, move to the Fibonacci section of AutoChartist and look to see if the market is finishing up a 3-point extension, and see if you'll get that counter trend trade. At the same time, if you're looking at the chart patterns and you see something that looks like it's going to reverse to the upside, then you may want to look at the 3-point extension pattern to see if it's also indicating that this market has a turning point. So that's real critical. And oftentimes, watch your time periods, because when you're looking at this Fibonacci, sometimes it takes longer, say a 240-minute chart for a Fibonacci to develop. However, there may be something taking place on a 15-minute, 30-minute, or 60 minutes in the conventional AutoChartist chart pattern section. So it's real critical to look at. So remember that with this extension, it's finding support and resistance within the last move. So here's the last move, and here's the resistance point it's looking for. And these resistance points are used to help determine where a current move or a trend may end. Okay? It is possible that D is the end of this entire move, and you'll know by momentum how the market trades through these retracement levels. If it goes through these retracement levels rapidly, then there's a good chance it's going to eventually take the swing top out and move higher. If it begins to move up higher into these retracement areas and lingers around, then oftentimes that means that a seller is still present and that the market is poised for a further decline. So you want to read the market when it's at those retracement levels. Another chart that we identified AutoChartist is the 3-drive Fibonacci pattern. In the 3-drive pattern, again, you can see the characteristic lightning bolt in here. With the 3-drive pattern, it's formed by 3 consecutive symmetrical mountaintops for bearish patterns, or they call them valleys for bullish patterns. So in this case, X to A and B to C are 2 symmetrical patterns, as well as the relationship between A and B and C and D. So knowing what B and C were and what X and A were, we're looking for retracement perhaps equal to those 2 swings or into these retracement levels that have been identified. So the AutoChartist here is, again, it measures the symmetry and it looks for the relationship and gives a forecast for where the market can turn. So depending on the type of trader you are, one that maybe wants to know ahead of time where a market could go or where it could stop, this pattern may be interesting. If one is developing in the marketplace, an AutoChartist will try to identify it and lets you know ahead of time in the emerging section where the market can go and where this turning point can be. And once that takes place, you'll be able to either anticipate and trade ahead of the crowd, and then maybe be in the market before the crowd actually helps turn the market lower. So in this case, the same principle is applied. After point D is formed, the market is looking for a retracement at a minimum of the last leg, C to D. Now, when you look at this pattern, you'll see that it contains two connecting A, B, C, D patterns. They're actually intertwined. So you'll see inside this pattern quite a few different Fibonacci patterns once you start to work with it. So that's if you want to know a little bit about the background, is that this one is more of a combination of various patterns. Also inside here is a butterfly pattern, which we'll look at later. But you can see that's basically the body and the wings here. So you'll hear this called different things. But the main thing you want to know is that based on this action here from X and A, B and C, and from A and B, that there's some predictability into where this market can go, and that's what AutoChartist identifies at point D. So not only does it identify where this top could possibly be, but then it identifies the retracement that could be taking place also. The pattern, again, looking at this pattern, it should stand out as three distinct symmetrical drives from a bottom or from a top. So in this case, from a bottom. And again, price and time are supposed to be symmetrical in this. And